the U.S. trade deficit widened in July to $42 billion. Exports to Europe, India, and Brazil slowed, while the U.S. trade gap with China grew to a record $29.4 billion. For more on the U.S. trade numbers and free trade in general, we're joined by Graeme Maxton, author of The End of Progress, How Modern Economics Has Failed Us. First, let's get to the numbers. Well, welcome to the show. We want to talk a little bit about this record on the trade gap. And, the media, us, obviously a business show, we focus a lot on these numbers. How important are they?
Well, they certainly matter because they affect the value of the currency in the long term. And, of course, they affect the amount of debt that, or currency that the U.S. has to see flowing out from the country. So they are important. And they're important when they get to this sort of level because it means that the U.S. trade policy has to change at some point. It can't carry on increasing its trade imbalances to this sort of degree. But certainly at this point, I don't think we need to be too worried about them in the short term. But in the long term, it does need policy action.
You have a number of articles, Graeme, that, for lack of a better word, has been controversial. And I want to start with a couple of these. One is about the economy in general. A lot of your reports say that the economy, as we know it, where you go out and make money and it's positive for the economy, you say that system or that structure itself should be looked at a little bit differently. Can you explain?
Yeah, I mean, the book's called The End of Progress because the way we measure progress today, certainly in the West, is in terms of economic growth. And the growth of the last 30 years has been fueled by debt. And so if we want to have more growth, we have to have more debt. And that's simply not possible. If you look at the levels of debt in consumer debt, in bank debt, in government debt, in Europe, in the US, we simply can't add any more debt to have more growth, and therefore we can't have any more progress. And so the wider point is that we need to stop thinking about growth as the primary measure of our human development. There are far more important ways of progressing as a species on the planet than thinking about economic growth. We've become obsessed with this measure, and it doesn't actually mean anything. I mean, growth by itself is not a goal. We can find a different way of progressing.
Graeme, I think that perhaps it might be in your interest to give Ben Bernanke a call because he's beginning a two-day meeting, perhaps expanding the balance sheet of the United States. And one of the big arguments is exactly the opposite of really what you're saying, is that he wants to expand that balance sheet because we want more debt so they can put that debt into the system, or I guess into the economy, so that individuals and consumers can go out and spend it. But you're saying that's wrong.
Yes, and if you look at what's happening in Europe, the policy there is of austerity to try and stop any more debt being accumulated, to see deflationary pressures build up, and to perhaps write off some of the debts. The problem with the US policy is that you are going to create inflationary pressures, and it's not actually working. I mean, if you think about it, we're actually 5 years into this slowdown, and we've seen growth, but it's only because we've had all this cash pumped into the system. It's not real growth at all. It's been a fake sort of growth that we've had for the last 4 or 5 years. And at some point, we actually have to make the adjustments to the way we live, to the way we spend. Otherwise, we're going to hit a wall at some point, and we're going to see another economic collapse.
You talk about the United States, but just across the border there in Hong Kong, just north of you, of course, is China, and another controversy of whether or not, or should they not, introduce additional stimulus packages. And from listening to you, you're saying no, but I also want to bring up a separate point, is that doesn't the growth in the economy benefit a significant portion of the lower class? In other words, doesn't the wealth eventually spread some to the poor?
Well, actually, the evidence of the last 30 years is no. I mean, all the economists told us that the wealth would spread down, although they never explained exactly how it was going to spread down. But if you look at the income disparity in the West and in China, it's got worse in the last 20 years. The rich have got richer, and the poor haven't got much richer at all. So the gap between rich and poor has actually widened. I think when you talk about China, though, there's a great deal of emphasis on the slowing rate of growth, and it's slowing to 7.5% or 8% this year, and people are getting very worried about that. I mean, let's put this in perspective. This is the second biggest economy in the world, and it's growing at 7.5% or 8% a year. That's spectacularly good. And if you look at the demographics, the number of people entering the labor force now is beginning to slow because of the one-child policy. China doesn't need the rates of growth that it had in the past. Now, the world may need the growth, but as far as China is concerned, it's growing quite happily, thank you.
All right, Graeme, I want to thank you for this very fascinating topic. We're going to have you on again. Thank you again.